Hey, greetings, everyone. Lieutenant Colonel Alan West here, the Executive Director of the American Constitutional Rights Union, the ACRU.org. Thanks so much for joining us for this segment on Live Free TV, where we talk about those real pertinent and important constitutional rights issues that are affecting you in your everyday life. And I think that there could be no other topic that would draw your interest and attention than what's going on with your wallet, what's going on with your pocketbook, what's going on with your financial investments. And today we want to talk about this thing called ESG, environmental social governance. And we're joined by Will Hild, who is known for his battles against BlackRock, Bank America, and other large companies. He is the executive director of Consumers Research and has been a leading the fight against ESG. The Washington Post labeled Will the leader of the group sharpening the GOP attack on woke Wall Street. And in a recent profile, Bloomberg called Consumers Research the little-known group battling Wall Street over ESG. And Consumers Research, where Will is the executive director, is the nation's oldest consumer protection organization. Will Hill, thank you for joining us.
Glad to be here.
Will, let's talk about this environmental social governance issue, something that, for most of us, it just seemed to pop up on the radar screen. Maybe it's been around a little bit longer, but this really does threaten and challenge our financial investments and also some of the key industries, especially when you look at our energy independence. Tell us a little bit more about this ESG.
Yeah, so ESG, as you noted, stands for environmental social governance. And it's billed by its proponents as just another form of investing, much like, Warren Buffett is famous for value investing, things called momentum investing. And they do that because what it really is, it's a stalking horse for advancing the far left progressive agenda, but through corporate America, bypassing the ballot box, bypassing democracy, and doing a bunch of stuff that they could never get American citizens to vote for, but shoving it down our throats anyway. Through corporate America, and it operates through a number of different vehicles. But what I will say is it's similar. One thing your viewers should be thinking about is it operates a little bit similar to CRT in that critical race theory is a brand. It's got like a trademark. There are textbooks that say CRT textbook, but there's all kinds of CRT type stuff that we find in textbooks about America being a white supremacist country or capitalism being inherently white supremacist. That doesn't say CRT on the label, but is still critical race theory. And ESG is kind of the same thing. It's not just when people invest in ESG funds. It's any time that the financial industry tries to use its market power to push a far left progressive agenda. That's ESG. So it can be the large asset managers, it can be banks, it can even be insurance agencies. We can talk a little bit about that. But that kind of gives your viewers a framework to think about it. Anytime they see a financial services company pushing a woke agenda, they are encountering ESG.
So let's basically try to break this down. So when we talk about financial freedom, economic freedom, what it seems to me that is happening is that people are taking my investment funds and they're using it and funneling it toward these leftist policies, programs, ideological agendas. So the next thing you know, that I'm supporting something that goes against my own principles and values. And furthermore, it seems that the fund manager is not really informing me about this investment.
That's 100% correct. So one of the big players in this space is the asset managers. And these are large companies like BlackRock and its CEO, Larry Fink, hoovered up management for tons of state, local, and federal pension funds. They manage a ton of university endowments. So think of those large pools of capital, everything from, the state of Texas and its huge pension funds to California, I'm sorry to say, like CalPERS and CalSTRS, right? Those are tens, if not hundreds, if not thousands of billions of dollars that they have in assets under management. And they go and they buy shares of companies with that money. Remember, it's not their money. It's our money. It's America's money. But they go and they're managing it for somebody else. So they go and buy up these shares of these companies. And in a lot of cases, they're not even making discrete investment decisions. They're not saying this company over that company. They're buying a broad index of like the S&P 500. A lot of your listeners are probably familiar with index funds and index investing. That's most of what BlackRock does. But the net effect of that is that they end up in control of very large percentages of the shares outstanding of these companies. And so, like, take a company like Exxon, they might have, somewhere between 8 and 9% of control of
Mhm.
all the shares outstanding of Exxon. That may sound like a lot, but that is enough. When you're one player and you've got that much, that
Yeah.
is enough to change out board seats on their board of directors. It can even be enough to change out members of their corporate executive suite, change out their CEO. And so they go around and they use this immense amount of power that they have to really bully corporate America, corporations, not just fossil fuel companies, but all kinds of companies, to push them in a far left direction. Now, one of the things that they focus on is that E stands for environmental, and really, all that
Mhm.
means for them is this net zero focus. So
Mhm.
really, just, are you on your way to your company becoming uh, carbon emissions net zero by 2050? But the S, we've seen the S with the Budweiser and the Target stuff, right? They're
Yeah.
pushing this transgender ideology, they're pushing LGBTQ ideology, they're pushing race and sex based quotas, both within the company and even at the board level. Larry Fink's on record saying publicly he wanted race and sex quotas for the boards of the companies that he was invested in. So that's the mechanism by which these asset managers are able to push this, because they've taken our investment dollars across the country, bought up
Mhm.
these shares, and now, even though it's not their money and it's not their shares, they still have control of them, and that allows them to push a far left agenda.
It was amazing to me because the Biden administration tried to buy executive order, and then, of course, they tried to push it through legislatively that they could do this, that they could force people in their pension funds to go into these ESG funds. And one of the arguments I've heard the left come out with is, why are you conservative? Why are you people on the right, upset about this? Because this is part of the free market. This is not really part of the free market. This is about Marxist totalitarianism in our financial management system.
That's 100% correct. And in fact, it's kind of ironic because, the left, when have the left ever defended the free market or tried to stand up for the
Yeah,
free market? And yet now that we've called out their ESG scams, suddenly they're big fans of the free market and they,
yeah.
hey, hands off. This is just the market making a decision. Nothing could be further from the truth. This goes back to Econ 101 and
Mhm.
even British common law, 100-year-old or multiple 100-year-old British common law. The idea of a fiduciary, when you hand over your money to an investment manager, they have a legal fiduciary duty to act as if they were in your shoes. This is the same duty
Mhm.
that your lawyer owes you in representing you, that your doctor owes you when they treat you for an illness. These asset managers are supposed to focus on the interests of their customers. Now, and I mentioned before, a lot of these customers may be governments, but they are pensioners. So they can't just say, well, we're investing for California, so we're following,
Yeah.
California's far left, so we're doing a far left agenda. Their true fiduciary duty is to those pensioners who come from across the political spectrum, which is why their legal duty is to focus on returns for their client, not on
Mhm.
pushing a far left progressive agenda. And so, and that fiduciary duty is the bedrock of the free market. If you
Yeah.
want to go take your money, Colonel, and go put it in an ESG fund, I might not agree with it, but I would defend your right to do so.
Yeah.
What Larry Fink and BlackRock don't have the right to do is to take money from people who may not even have control of it. If you've got a pension with a state, you're
Mhm.
not getting asked
Mhm.
who you want to manage money. He doesn't have the right to take that money and push his own personal politics with it. And that's really what we're talking here. It's a hack of the free market system. It's a violation of it. And it's really happened because, unfortunately, I'd say conservatives have not had their eye on the ball in terms of
Yeah.
enforcing the existing laws around fiduciary duty.
You bring up a great point because, I did serve in the military. And one of the things we're finding out is the thrift savings plan for the United States military. That's being invested in Chinese companies. So, in other words, we're taking money that from our service members and we're investing it in Chinese companies that are linked to the Communist Chinese Party, who they're our number one geopolitical foe. So, how do you talk about consumer protection? How do consumers protect themselves? What should they be asking? What should they be demanding from their asset managers first and foremost and right up front?
The number one thing, remember, I talked about how ESG is a bigger phenomenon than just the funds that have ESG in the name. For
Hmm.
those people who have direct control over their retirements, either you have a 401k or you have your personal brokerage account, the first thing you should do is make sure that you don't have any money with any of the BlackRock branded funds. Or, I'm sorry to say, there are some other bad actors out there, State Street and Vanguard. Those
Okay.
big three, they're the largest three. They're called the big three. If you have money in an index fund with them, I highly recommend you move it to maybe a Schwab or a Fidelity branded fund, which neither of those firms is perfect, but they're much better than Vanguard, State Street, and BlackRock. And the reason for that is even if you have money in a vanilla investment like the the iShares S&P 500 index is the BlackRock
Mhm.
branded fund. Larry Fink is using the shares he's purchased with your money to push a far left progressive agenda. When he walks into the boardrooms of these companies, he's wielding your shares when he walks in to demand that
Yeah.
they start, pushing a far left agenda. So that's step one. The other thing I would recommend for those like yourself, Colonel, who have
Mhm.
served our country either in the military or as a federal employee, you're the federal thrift savings plan. I hate
Mhm.
to tell you, about 80% of it is managed directly by BlackRock, and the other
Mm.
20% is State Street. And unfortunately, you don't have often direct control over that. That's something that the government has.
Yes. Yeah.
But calling your representative and letting them know you don't appreciate that as a service member and you are keeping an eye on that and you expect them to do something about that is an important step as well.
Let's talk about this ESG score, but because it's just amazing to me the leverage that is out there, asking companies, what's your score? Where do you rate on these things? I know that the Human Rights Campaign is really big on this scoring mechanism, and it reminds me of this social credit score that they're using over in China right now. How is ESG tied in with this, credit score, whatever they call it?
That's a great comparison to draw because there's a lot of similarities between these two, and ESG seems to be moving in the direction of becoming equivalent to the CCP social credit score in China. As of right now, there is no single authority that puts out an ESG score. A lot of different companies, quote unquote, compete on putting out these scores, and they supposedly have different ways to go about it. For the most part, that's simply a scam to increase the amount of fees that these asset managers get to charge when they manage an ESG fund. There's been a huge shift from active management to passive management. Wall
Mhm.
Street has been desperate for any gimmick they can come up with as an excuse for higher management fees. And ESG metrics kind of serve that because they can say, hey, we're not a normal index fund. We're doing all kinds of advanced ESG scoring. You need to pay us, sometimes 2, 3, 4 times the benchmark index fee for that privilege of availing yourself of our scores. So unlike the CCP as of right now, there's no central authority issuing these scores. However, it is laying the groundwork for such a scheme. And we see that
Yeah.
coming out of the SEC just in the last year. They are moving towards finalizing a rule that would require every public corporation to publish as part of their financials their carbon emissions. These are called climate disclosures. Okay.
Yeah.
So every publicly traded company is going to have to start putting out how much carbon they emit. And I wish that's where it ended right there. This is how insane it is. There are 3 levels of these disclosures: scope 1, 2, and 3. 1 is the company itself. 2 is the carbon emissions for all of the vendors for that publicly traded company, even if
Hmm.
they're not publicly traded. Remember, the SEC is only supposed to have dominion over our public securities markets. If you're not
Yes.
publicly traded, the SEC is supposed to leave you alone. But lo and behold, through these scope 2 disclosures, they're going to force corporations to force all their vendors to disclose their climate. Well, now we're on the way to a social credit score around climate. But it gets even slightly worse. Actually, not slightly, much, much worse. Scope 3 disclosures would require the company to disclose the emissions related to the consumer's use of their own products. So imagine you buy a lawnmower from Home Depot. Well,
Yeah.
now that lawnmower company, let's say it's Stihl or Ryobi, okay,
Hmm.
they are on the hook to report in these Scope 3 disclosures the amount of carbon emissions of you using that product year over year over year. And the net effect over time, because of tort liability and securities liability when they're wrong, they will just make a guess. They'll say, hey, we think somebody's going to mow their lawn, 10 times a year. That equals
Yeah.
this amount of. They're going to get sued when that's wrong. And what the court is going to rule is that that's not the best practice. And let me tell you what the court is going to say the best practice would be.
Put a
It's going to be
monitor
put
on
a
me.
tracking device in
Yeah.
that device, a tracking
Yeah.
device in that lawnmower, and track your actual usage so that it's 100% accurate. And to bring a long story to an end, that is how we end up with a social credit score. individual consumers being tracked in their purchasing, but also their actual use of the products that they buy.
And you know what? And you just brought up a great point. They're talking about lawnmowers, but it could be the stove that you have. It could be the washing machine. It could be the dishwashing machine. It could be anything that all of a sudden they are tying to this whole, climate change, paranoia and alarmism that they're creating. And, Will, it's so funny you bring this up because, I still get out and do a good bit of running. So, and I use Brooks running shoes. And so I was looking at some reviews on a new running shoe. And I had to go through this litany about how they're so carbon neutral and all this stuff. I'm like, I really don't give a damn. I just want a good pair of running shoes. Just tell me what they're. I don't care about, like you say, the vendors that you use and everyone to make this certain running shoe. So it's already happening. I'm seeing it with, like I said, with Brooks Running Company. So if anybody at Brooks Running Company is watching this, just make a good running shoe. Don't start telling me about carbon neutral and what I'm doing in an environment. I don't need that. But the next thing I want to talk about, because the left never will admit that this thing where it leads to. And I think that we saw when they tried to push this ESG economic agenda on Sri Lanka, it didn't end up so well, did it?
No, sir. No, sir. And we can directly tie that to ESG because the prime minister or the former prime minister of Sri Lanka tied it to ESG. In 2018, it sounds like a conspiracy theory, but he posted a blog post on the World Economic Forum website saying, here's how I'm going to make Sri Lanka rich. And he articulated an entire ESG platform. Every single thing he put forth was a carbon neutral, net zero ESG platform. Well, 4 or 5 years later, I think it was 4, he had bankrupted his country, destroyed their economy. They had banned synthetic fertilizers, which had led to a famine in the country. And he was boarding a Sri Lankan Navy ship to escape, probably to Switzerland or somewhere in Europe, to keep from being hung by the citizens of Sri Lanka who had stormed the prime minister's palace and were hanging out in his pool at the time. So he absolutely destroyed his country, quote unquote, with ESG. It is the opposite of making your country rich. It destroyed Sri Lanka, and it will destroy America too if we let it.
So what is the big challenge you see? And, I always like to focus on educating, informing, and activating people. What's the big challenge you see right now as you go forward and getting people to understand the dangers of ESG?
That's a fantastic question, Carl. I'm glad you asked it. I appreciate being action-oriented because often conservatives, we stop at outrage, right? Yeah. We turn off our TVs and go to bed and think, okay, hopefully tomorrow I'll get some better news. But this is not going to stop until we stop it. And so what I would recommend, the number one thing, one of the major advantages we have in the ESG fight is that so much of it is illegal. I mentioned the breach of the fiduciary duty. There's also security fraud issues. There's also a huge antitrust issue, which we didn't go into. But these big financial players are colluding with each other in order to push these agendas. You've seen a number of conservative attorneys generals stand up to that just recently last month. Supporting your state elected officials is the number one thing you can do. Calling them up, letting them know that you care about pushing back on ESG, that you don't want your money, your investment dollars, your state's investment dollars being used to undermine your interests. ESG, I'll be the first to admit, I'm obviously I care about this issue deeply. It's a wonky, complicated issue. It's got to do with all this Wall Street mumbo jumbo, right? Most elected officials, when they go out to these town halls or whatever, they're used to hearing about other social issues, abortion, the trans issue, the taxes, okay? Making sure you don't have to understand every jot and tittle, but if you let them know that you care about the issue and you want something done about it, that is going to make all the difference, and that will spur them, and we can help them, push back on.
How can people follow you, and how can people, one of the things I always tell folks is, you got to develop your own little 3x5 cards. So how can you help people to develop their own little 3x5 cards? What's your website? Where can people track you down?
Absolutely. Well, the first is they can come visit us at consumersresearch.org. That's our website, consumersresearch.org. I can be followed on Twitter at Will Hild. That's WILLHILD. And then lastly, I would say if they go to our website, in terms of a quick and easy, we have weekly woke alerts. We send out text messages to your phone if you sign up. We don't just outrage you about what this week's company is doing. We give you their customer service number, and we say we highly recommend you call them. That's one of the other things that consumers should be doing. A lot of times we focus conservatives on the bottom line. We think, well, I'll stop buying their product, and that's all well and good, and we support that. But if you don't tell the company why you stopped buying their product, oftentimes they don't know. So we always make sure to include that customer service number and give you somebody you can call and explain why you're not going to use that company anymore because they've gone woke.
Okay, one last thing. The top three of the ESG asset managing houses.
BlackRock, State Street, and Vanguard. Stay away from all three of them.
And tell people again, because this is so critical to my brothers and sisters still serving in uniform. Your thrift savings plan, how much of it is managed by those top three?
About 100% is managed by those top three. BlackRock manages about 80%, and State Street has been given about 20%.
So what Will has just told you all is that your hard-earned thrift savings plan money is going to further advance leftist policies, and probably policies that you being in the military should not agree with. And as I already articulated, companies that are Chinese and backed by the Chinese Communist Party, our number one geopolitical foe. So please, you all, look up Will Hild, look up what they're doing there at the Consumer Research Organization. Be better educated, be better informed, and therefore you can be better activated. Will, thank you so much for joining us here at the ACRU Live Free TV.
Thank you so much for having me.
Thank you. You can't live free unless you have economic freedom.
Amen.